Imagine adding stocks to your portfolio that are already reshaping entire industries and still have massive room to grow. Today, I'll break down 3 companies dominating their fields: a digital healthcare pioneer, a global research powerhouse, and a leader in digital advertising technology. These aren't speculative bets, they're established innovators with huge addressable markets. If you want ideas that could seriously impact your financial future, you're in the right place. Let's dive into the first stock. Quick reminder, this is for education, not financial advice. First up is Teladoc Health. At the forefront of the telemedicine revolution, this company has been a game-changer in the healthcare industry, leveraging technology to bridge the gap between patients and healthcare providers. In a world where convenience and accessibility are paramount, Teladoc stands out as a pioneer. Teladoc makes healthcare accessible from anywhere, connecting patients to doctors, therapists, and specialists 24/7 via phone or computer. Whether you're at home, at work, or even on vacation, you can consult with a healthcare professional without the need to visit a clinic or hospital. This level of accessibility is particularly beneficial for those living in remote areas or with mobility issues. Their platform covers everything from urgent care to mental health and chronic condition management, making healthcare more convenient and efficient. Imagine being able to manage your chronic conditions, like diabetes or hypertension, with regular virtual check-ins and personalized care plans. This not only saves time, but also ensures that patients receive continuous care. The pandemic accelerated adoption, but the shift to virtual care is here to stay. The convenience and efficiency of telehealth have made it a preferred choice for many, and as technology continues to advance, the capabilities of virtual care will only expand. Teladoc's business model is built on recurring revenue. They partner with major employers and insurers who pay per member per month, creating a stable, predictable income stream. This model not only ensures financial stability, but also allows Teladoc to invest in further innovations and improvements to their platform. Their acquisition of Livongo expanded their reach into chronic care, integrating smart devices and data-driven coaching for conditions like diabetes. This integration allows for real-time monitoring and personalized feedback, helping patients manage their conditions more effectively and reducing the risk of complications. This makes Teladoc more than just a telehealth provider. It's a comprehensive digital health platform. They offer a holistic approach to healthcare, addressing not just immediate medical needs, but also long-term health and wellness. Their total addressable market is enormous, with US healthcare alone worth trillions. The potential for growth is significant, especially as more people become comfortable with and reliant on digital health solutions. Despite recent stock volatility and increased competition, Teladoc's first-mover advantage, deep client relationships, and global clinician networks set it apart. Their established presence and reputation in the market give them a competitive edge that is hard to match. The company's scale and trust are hard to replicate. With a vast network of healthcare professionals and a robust technological infrastructure, Teladoc is well positioned to continue leading the telehealth industry. The key to their future: proving their platform improves outcomes and lowers costs. By demonstrating the effectiveness of their services, Teladoc can attract more clients and solidify their position in the market. Early data from their chronic care programs is promising, helping retain big corporate clients. These programs not only improve patient health, but also reduce healthcare costs for employers, making Teladoc an attractive partner. The recent pullback in stock price could be an opportunity for long-term investors. With the company's strong fundamentals and growth potential, investing in Teladoc now could yield significant returns in the future. Teladoc is the clear leader in a secular growth industry. Virtual care will only become more integrated in the next decade. As technology continues to evolve, the capabilities and reach of telehealth will expand, making it an integral part of the healthcare system. Their focus on whole-person care, combining primary, mental, and chronic care, addresses the fragmentation and high costs of traditional healthcare. By offering a comprehensive suite of services, Teladoc can provide more coordinated and effective care. Risks remain: execution, integration, and competition from giants like Amazon. However, Teladoc's established presence and continuous innovation give it a fighting chance against these challenges. But their network effect is powerful. More patients attract more doctors, which attracts more clients, reinforcing their leadership. This virtuous cycle strengthens Teladoc's market position and drives growth. Teladoc's recurring revenue, sticky ecosystem, and vision for the future make it a compelling long-term play. Their ability to retain clients and continuously innovate ensures sustained growth and relevance in the evolving healthcare landscape. This is a $157 billion company operating in virtual care, generating $256 billion in revenue in 2024. Profitability remains a challenge. Earnings per share came in at -$1.15 and net income was a loss of $1 billion, while the stock currently reflects a price-to-earnings ratio listed at 13.57. The numbers tell a story of solid top-line scale paired with ongoing efforts to rein in losses. For patient investors, TDOC is a stock to watch. With its strong fundamentals and growth potential, Teladoc represents a promising investment opportunity. The healthcare landscape is changing, and Teladoc is leading the charge. Their innovative approach and commitment to improving healthcare delivery make them a key player in the industry. If you believe in the future of digital health, this is a name to consider. Teladoc's vision and execution make it a standout in the telehealth space. Let's move to our next industry disruptor. Scene transition. Next, let's talk about Gartner, ticker IT, the quiet force behind major corporate decisions worldwide. While you may not see their name in the headlines every day, Gartner's influence is woven into the fabric of how the world's biggest companies operate and evolve. Their research and advice shape the strategies of industry leaders, from tech giants to financial institutions and even government agencies. Gartner is the gold standard in research and advisory, guiding leaders in IT, finance, HR, and more. When executives face tough choices, like which software to buy, which tech trends to follow, or how to structure their teams, they turn to Gartner for trusted, data-driven answers. Their guidance is often the difference between costly missteps and breakthrough success. Their Magic Quadrant reports are industry benchmarks, shaping which tech companies thrive. These reports don't just rank products, they set the agenda for entire industries, influencing vendor roadmaps and customer buying decisions. Being named a leader in a Magic Quadrant can make or break a company's fortunes. Gartner's influence is immense. Their insights drive billions in business decisions. Every year their recommendations help companies allocate massive budgets, negotiate better deals, and avoid expensive pitfalls. In many ways, Gartner acts as a behind-the-scenes partner to the world's most powerful organizations. Their subscription-based model means recurring, predictable revenue from over 75% of the Global 500. This isn't just a one-time sale. Clients renew year after year, relying on Gartner's insights to stay ahead of the curve. That sticky, high-retention business model is a dream for investors. For clients, Gartner is a must-have, cutting-edge research that helps avoid costly mistakes. Their reports are packed with actionable insights, market forecasts, and competitive analysis that can mean the difference between leading and lagging in a fast-moving world. This gives Gartner strong pricing power and high client retention. When your advice is mission-critical, clients are willing to pay a premium, and they rarely leave. Their business is split into research, the core, conferences, and consulting. Each segment reinforces the others, creating a powerful ecosystem. Conferences bring together industry leaders while consulting offers tailored solutions to complex problems. Research delivers high-margin subscription access to a vast library and expert analysts. Clients can tap into decades of proprietary data, best practices, and one-on-one guidance from specialists who know their industries inside and out. Conferences and consulting deepen client relationships and reinforce Gartner's thought leadership. These events are more than networking, they're where the future of business is debated and decided. The network effect is huge. More clients mean more data, making their research even more valuable. As Gartner's client base grows, so does the quality and depth of their insights, creating a virtuous cycle that's hard for competitors to match. Barriers to entry are sky high, decades of data, thousands of analysts, and deep trust with C-suites. New entrants can't just replicate Gartner's reputation or the relationships they've built with decision-makers at the world's top companies. Financially, Gartner is a cash flow machine, using buybacks to boost shareholder value. Their ability to generate consistent free cash flow allows them to reinvest in the business, reward shareholders, and weather economic storms. Risks? A severe recession could slow growth and AI could disrupt research, but Gartner is already leveraging AI to enhance its offerings. They're integrating advanced analytics and machine learning to deliver even sharper insights, staying ahead of the curve, rather than being left behind. In fact, Gartner's early adoption of AI tools is helping them process more data, spot trends faster, and provide clients with real-time, actionable intelligence. This proactive approach to technology ensures they remain indispensable even as the business landscape evolves. The stock often looks expensive, but you're paying for quality, a wide moat, high margins, and consistent growth. Few companies can match Gartner's combination of brand strength, recurring revenue, and operational excellence. Gartner is a classic compounder, steady double-digit growth that adds up over time. For long-term investors, this kind of compounding can be transformative, quietly building wealth year after year. As business complexity grows, demand for Gartner's insights will only increase. In a world where technology and markets are changing faster than ever, having a trusted advisor is more valuable than ever before. Gartner is valued at $1868 billion. In 2024, it delivered $6.2 billion in revenue and $1.25 billion in net income, translating to earnings per share of $16.20. The market is pricing that consistency at a PE of 15.21, which for a company with durable cash flows and sticky enterprise clients, suggests investors see steady execution ahead. This is a stock you can hold for the long term, forming the bedrock of a strong portfolio. It's the kind of business that can weather storms, adapt to change, and keep delivering for shareholders. Don't overlook this under-the-radar powerhouse. While it may not grab headlines, Gartner's steady performance and strategic importance make it a hidden gem for patient investors. Now let's look at the future of advertising. Scene transition. Our final pick is the Trade Desk, TTD, the independent leader in digital advertising technology. This company has carved out a unique niche in the ever-evolving landscape of digital marketing, standing out as a beacon of innovation and efficiency. The Trade Desk isn't an ad agency. It's a platform that lets brands and agencies buy and manage digital ads across every channel: web, streaming TV, podcasts, and more. Imagine having the power to control your advertising strategy across multiple platforms from a single intuitive interface. This is what the Trade Desk offers, making it an indispensable tool for modern marketers. Think of it as the stock market for digital ads, using data and AI to target the right audience at the right time. The platform leverages advanced algorithms and machine learning to ensure that every ad dollar is spent efficiently, maximizing return on investment for advertisers. Their independence is key. They don't own media, so they're trusted by agencies to maximize results, not push their own inventory. This neutrality allows them to focus solely on delivering the best possible outcomes for their clients, fostering trust and long-term partnerships. The global ad market is shifting from traditional TV to streaming, connected TV, CTV, and the Trade Desk is perfectly positioned to capture this massive trend. As more viewers cut the cord and move to streaming services, the demand for targeted, personalized advertising grows, and the Trade Desk is at the forefront of this transformation. CTV allows for targeted, personalized ads, and the Trade Desk's platform is the toll booth for this transition. They provide the infrastructure that enables advertisers to reach their desired audiences with precision, making every ad impression count. Their growth has outpaced the industry, and they're profitable, a rarity among high-growth tech firms. This financial stability, combined with their innovative approach, makes them a standout player in the digital advertising space. They anticipated the end of third-party cookies and built Unified ID 2.0, an open-source identity solution gaining industry-wide adoption. This forward-thinking move positions them well for the future as the industry shifts towards more privacy-conscious advertising solutions. This move cements their leadership in the post-cookie world, making their platform indispensable. Advertisers looking for reliable, future-proof solutions are increasingly turning to the Trade Desk. Advertisers get real-time analytics and control, creating high switching costs and sticky client relationships. The ability to see immediate results and adjust strategies on the fly is a game-changer, fostering loyalty and long-term engagement. Risks. The ad market is cyclical, recessions can slow growth, and competition from giants like Google and Meta is fierce. However, the Trade Desk's unique value proposition and strong market position help mitigate these risks. But the Trade Desk's independence and open internet focus are major differentiators as brands seek alternatives to walled gardens. This approach resonates with advertisers who value transparency and control over their campaigns. The stock trades at a premium, but for good reason: market leadership, visionary founder-led management, and a long runway for growth. Jeff Green, the CEO, has a clear vision for the future of digital advertising, and his leadership is a significant asset. As ad dollars migrate to digital streaming, the Trade Desk stands to capture a huge share. The shift from traditional to digital media is accelerating, and the Trade Desk is well positioned to benefit from this trend. We're still early in this transformation. The opportunity is massive. The digital advertising landscape is evolving rapidly, and the Trade Desk is at the cutting edge of this change. The Trade Desk is with a $24.8 billion market cap. In 2024, revenue reached $2.4 billion, net income totaled $78.8 million, and earnings per share were 0.83. The valuation stands at a PE of 61.12, rich by traditional metrics, but it reflects the company's position in the open internet ad ecosystem and the growth investors expect from its platform at scale. For investors with a long-term view, TTD is a pure play on the future of advertising. The company's innovative platform and strategic vision make it a compelling investment for those looking to capitalize on the digital advertising revolution. Volatility is part of the journey, but the potential rewards are significant. The digital advertising market is dynamic, and while there are ups and downs, the long-term growth prospects are strong. The Trade Desk is a top-tier growth company for any future-focused portfolio. Its innovative approach and strong market position make it a standout choice for investors looking to the future. That wraps up our 3 picks. Let's talk about your next move. Scene transition. There you have it, Teladoc, Gartner, and the Trade Desk, 3 companies with the potential to transform your portfolio. These aren't short-term trades, they're long-term plays on powerful trends and massive markets. Put together, these 3 names span very different risk-reward profiles. One scaling through losses to capture a long-term health tech opportunity, one compounding through a resilient B2B model, and one priced for growth as it expands its advertising platform. Want deeper analysis and exclusive stock tips? Join the Stocks Galore Patreon. Link in the description. Now, I want to hear from you. Which of these 3 stocks are you most bullish on for the next 5 years, and why? Drop your thoughts in the comments. Don't forget to like, subscribe, and hit the bell for more investing insights. Thanks for watching, and I'll see you in the next one.